Welcome to the VectorVest special presentation, this week titled Cherry Picking Contra ETFs. My name is Todd Schaefer, Manager of Research for VectorVest, and I'll be providing your presentation this evening. Wednesday's market drop of this week of more than 1.6% brought the worst performing Contra ETFs confirmed down search to the top of the one-day Derby winners list, with an overall gain of over 7% in just that one day. Of course, that performance and the dramatic market move had a lot of folks talking about Contra ETFs. But remember, much of this performance is driven by leveraged Contra ETFs. And leverage is a two-edged sword. So what's the best approach to trade Contra ETFs for you? That's the focus of our conversation this evening. Let's begin with what is an ETF. An ETF, or exchange-traded fund, tracks an index, a commodity, bonds, or a basket of assets like an index fund, similar in concept to a mutual fund. Unlike mutual funds, an ETF trades like a common stock on a stock exchange. ETFs experience price changes throughout the day as they're bought and sold. As an example, if the S&P 500 index rises 1% in a day, then an ETF that tracks that index should also rise 1% in a day. This is the correlated performance that we expect to see from a regular ETF. But we also have Contra ETFs. A Contra or inverse ETF is an exchange-traded fund constructed by using various derivatives for the purpose of profiting from an inverse or opposite move from the value of the underlying benchmark. Investing in Contra ETFs is similar to holding various short positions, but unlike short positions, they're bought long and do not require the use of margin. They can therefore be traded in many tax-protected accounts like IRAs and 401ks. So as we look at the performance of a Contra ETF, if the S&P 500 index falls 1% in a day, a Contra ETF that tracks that index should rise 1%. Of course, the inverse is also true. If the underlying index rises, then our Contra will fall. Next, we introduce the idea of leverage with double and triple funds, both regular and inverse. Both regular and Contra ETFs have versions that add leverage to their objectives. These funds use derivatives to provide double and triple the daily return of the given index. Of course, all Contra ETFs are designed to profit from the decline in a sector or market. Like other derivative-based ETFs, these leveraged funds are used primarily by speculators and momentum players that frequently hold onto these positions for no more than a few days. To illustrate this performance, again we have our basic index, the S&P 500. If it falls 1%, the regular 1x ETF will rise 1%, as we just saw in the previous slide. The 2x, however, would go up 2%. The triple would go up 3%. Of course, this magnification of the price action is also magnifying the price swings and therefore the volatility of the price action. So let me demonstrate this idea by going into the VectorVest program. From the home page of VectorVest, we'll open up the Graph tab, and we'll open up a performance graph. A performance graph lets us overlay several stocks one on top of each other and compares their performance on a percentage basis from a common starting point. So for our demonstration, let's start with the S&P 500 index represented by the SPX. Then the regular ETF, the spiders, SPY, the 2 times leveraged ETF, SSO, and the 3 times leveraged ETF, SPXL. So to begin, let's remove the VVC. We'll put on the S&P 500 index, and we see the 1X SPY ETF correlates very well to that movement of the index. Let's remove the index and let's see how the 2 times leveraged performance of the SSO compares to the SPY. the 2 times leverage now in red up above, it shares the same turning points, but the movements are twice as far. And by the time we get to the triple with the XPL, then again the pivot points are the same, but the movements are more exaggerated. And this means the leverage, of course, makes the price move up faster, but it also makes the price move down faster, and the size of the move is much larger in the leveraged position. This increased volatility in the price move makes the leveraged ETFs, particularly the triple leveraged ETFs, much harder to manage over the long term. I wanted to show you where to find ETFs and contra ETFs in the VectorVest system. We'll begin by going to the Viewers tab. But instead of going to the Stock Viewer, if we go a little lower in the list, we see we have an ETF Viewer. By opening that, this ETF Viewer finds all 1,500 ETFs in the VectorVest database. Of course, being a list of stocks, they're sorted by VST descending, but notice with ETFs, the RV and RS values are both 1. Because we don't know the internal makeup of the ETF, some in fact don't even hold any stocks, we give them a neutral value for both RV and RS. Therefore, their VST score is predominantly driven by their RT score. This sort of course would naturally favor the leveraged ETFs that should be moving faster in a trending market. The other thing to be careful of with ETFs in general is let's make sure that they have average volumes that are tradable. We like to see 6-figure average volumes as an indication of liquidity. So the ETF viewer has simply segregated all the ETFs into one viewer, but of course we've mixed both non-leveraged and leveraged, both regular and contra ETFs, all into the same viewer. The one thing they all have in common, however, is that they are in the ETF sector. So we can go to the sector viewer and find the ETF sector and right click on it and show all the stocks in the sector. Would be the same list of all the ETFs we saw in the viewer. But I can also double click on the ETF sector and see all the ETF industries within that sector. And of course there are 225 industries for stocks. ETFs are much more focused, where we have only 32 industries represented by these ETFs. One in particular, ETF Short, is comprised of all the contra ETFs, both leveraged and non, in the database. By double clicking on the industry, I'll then see all of the contra ETFs in the ETF Short industry, and of course sorted by VST, which again means that the highest RT values are brought to the top. We have, to the best of our ability, tried to develop naming conventions that help give us an idea of the ETF's benchmark, but for more clarity, simply right click on the ETF, go to the stock analysis report, and in the description we'll see whether or not it's leveraged or non-leveraged and by what amount, and whether it's regular or inverse. So we see here that BZQ is a twice levered inverse fund tracking the performance of the Brazil index. So this is our first layer of organization of the ETFs in the database. But for even more refined look, we go to the watch list groups and we see an ETF watch list group. And as I pull this down, we'll note several helpful watch lists. The watch lists are sorted alphanumerically, so if we scroll down a little bit to the middle of the list, we'll begin with non-leveraged ETFs, both contra and regular, in their own respective watch lists. We also see a little bit above that leveraged ETFs, both Contra and regular, which would include both 2x and 3x leveraged ETFs in both of those folders. But we saw at the top of the list that we made a refinement where we have separated the 2x from the 3x leverages on both regular and Contra. Moving down, we see a watch list of all Contra ETFs, both leveraged and non, and then another list called Contra ETFs. Let's take a minute to focus on this. And we see in the description that Contra ETFs are Contra ETFs that do not have to move inverse to the stock market broader direction. What this means is that historically, Contra ETFs moving contrary to their underlying benchmark were typically thought to be bear funds or bear market funds. But as the industry developed more and more ETF products, they developed contrary funds that followed benchmarks that weren't necessarily correlated to the industry, and these are typically commodity-based kinds of ETFs. For instance, precious metals often move contrary to the underlying market, as does the VIX, as another example. There's also a watch list for index ETFs, both regular and Contra. The index ETFs are limited to only the major indices. As you can see, we have many other ETF watch lists in the group, some of them specialized for previous ETF presentations. We also have many of them grouped by their underwriting organization. Remember to include, as you consider any of these ETFs for trading, remember to always look at their average volume. Of course, using our Unisearch tool would make it very easy to screen for minimum average volume requirements. Let's move over to the Unisearch tool. In the Unisearch tool, we have a search group for ETFs. The green arrows indicate bull market based ETFs. These would find regular ETFs, both leveraged and non. Red arrows indicate bear market searches looking for Contra ETFs. I'll focus tonight on just two of these searches for Contra ETFs. First, buying Contra ETFs. Our comments read, this is a bearish strategy that finds ETFs in the industry group ETF short. The search is sorted by VST ascending, which puts the Contra ETFs with the lowest combination of value, safety, and timing, and RT, by the way, at the top of the list. The second search we'll use is at the bottom of the list called Worst Performing Contra ETFs C Down. This search finds ETFs that are in the short industry group. They're sorted so the stocks with the lowest combination of RT and Comfort Index come to the top of the list. This search is intended to be used at the beginning of a confirmed down situation. So this search is putting more emphasis on the price trend of that Contra ETF by virtue of the CI indicator relative to the buying Contra ETF search, which simply looks for low RT scores. Notice that both searches, however, are using the filtering operation to limit these stocks to the ETF short industry group. They need to be priced at least $1, have average volumes over 100,000 shares. We've eliminated any of the minor exchanges, and we've eliminated those Contra ETFs. So to demonstrate this next concept, I'm going to change our date back to the 17th, which was the big down day in the market. And I'm going to run our buying Contra ETF search. Both tended to favor leveraged Contra ETFs because of their faster price action. And that may be okay for you if that's your cup of tea, but it's also easy to eliminate using those watch lists stocks that you're not interested in trading. So for instance, if I wanted to eliminate all the triple leveraged Contra ETFs, I could simply create an additional line to the search parameters that says stocks filtered by watch list does not include the ETF watch list of 3x leveraged Contra ETFs. Simply adding that filter then quickly removes all those triple leveraged ETFs from my search result. And of course, I can either include or exclude stocks based on their membership in the watch lists. As we start to look at some of the graphs of these ETFs, there's an important concept for you to understand, and it's similar to our bottom fishing concept at market bottoms. Let's quickly go over to a market timing graph. And remember that generally the trend of the broader market has been upward. Although we've been trading flat over the past several weeks, generally we've been in an uptrend, and while the market has been rising, then market-based Contra ETFs will have been falling. So we can cherry pick quote-unquote bottom fishing price patterns, particularly at the market turn, or we can cherry pick for more established uptrends, higher highs, higher lows, recognizing those trends may be short in duration. Now back to the Unisearch tab. As we look at the graphs of some of these Contra ETFs, they've been falling with the broad market, but with the big move in the market today, we see a pop in that price action. Let's zoom into just a 3-month window. And so this approach, buying at or very near the turn in the market, is very much like bottom fishing in that we see a change in the price direction with conviction, a tall candlestick showing us a directional change. We'll see that this search in particular finds that kind of price pattern predominantly. Let's go back to the Unisearch tool. And let's change our search from buying Contra ETFs to the worst performing Contra ETF search. We'll run that search on yesterday's close. Again, we still have triple leveraged ETFs, but again, if we graph the top 10, we'll find more candidates who are actually off of their absolute low. LABD has gone to the higher low. RUSS. An even better example here with SRTY and TZA. So this search does a little bit better job of finding stocks that have started into trends already. Of course, this search will become more and more effective as that trend becomes established. Bottom line with all our cherry picking approaches, if we're looking at a trending stock, we're looking for a stock that is now hitting higher highs and higher lows with some follow through. Or if we're looking for those that are popping right off the turn, we like to see that big price move with conviction behind it, a nice tall open green candle. And of course, we're always looking for follow through of both the market and the stock as we acquire the positions. So to recap, bull market retracements tend to be short-lived and volatile, so you need to stay nimble. Number 2, use leverage carefully as it increases the volatility of the stocks and your portfolio. Number 3, use Unisearch to refine your list of candidates. And number 4, always look for follow-through of the market and the stock you're purchasing right up to the moment you purchase. I've outlined some of our previous Contra ETF presentations. All of these available to you in the VectorVest University. With that, we'll conclude tonight's special presentation. I hope you'll be able to join us next time. Until then, have a great weekend.